Hello everybody, it's Tortoise Investing coming at you today with a very simple set it and forget it portfolio. I'm going to go through how I would personally set this up and maybe some alternatives that you could use along the way. But yeah, if that interests you, you're into dividend investing, make sure to hit that subscribe button. Join me on my financial journey and drop a like. Greatly appreciate it. And it makes the YouTube algorithm happy. And we all like YouTube to be happy. Now, without further ado, what I would do, again, no, this is financial advice. M1 Finance is the brokerage that I use. And the really cool thing with M1 is you can set up something they call pies. And the way that works is you allocate a certain percentage to a holding. And let's say that I was to deposit $100 into this account right now. It would take into factor all of these percentages. So everything is at their highest percentage that I would like, except for SCHD, which is at 36% out of 45, so it would dump the $100 into that more than likely. So the way that I personally would set this up is this way, right here. SCHD 30%, VOO 30%, QQQ 20%, and SCHG 20%. Now, the reason I would do this is SCHD gives you some nice dividends. VOO is literally the market. QQQ, kind of your aggressive growth, and SCHG is kind of your growth with less volatility, or that's at least how I view it, and everything that I've looked at when it comes to all the charts and stuff. It's not as volatile, but you don't get as much gain-wise from it. But these all kind of balance each other out. So if you go over to portfolioslab.com, I inserted all these and their percentages and compared them up against the S&P 500. And if you take a look here, over the last 5 years, it's beating the S&P 500 very reliably. And if you would have done this method, the benchmark, just the S&P over the last 5 years, has been giving you a return of 73.68%, where this portfolio would have gave you a return of 105.31%. And this does include dividend splits, everything. And if you take a look at the 10-year, dividend investing, it's all about that long game. You are beating it by almost 100%. And again, this is just a set it, forget it. You don't have to do any research. There's no looking up here's and there's and all the everywheres and worrying about earning calls. Just a simple little DCA. Now, again, like I said, you can set this up however which way you'd like it. This is just my personal way that I would do it. And let's go ahead and take a look at some of these. SCHD, we all know and love it. Top 10 holdings here. This is one of the favorites when it comes to the investing community. It does have a 3.57% dividend yield, which is very nice. It's got a low expense ratio at 0.06%. So again, another reason why it's a fan favorite. And there's not a whole lot of holdings, 102. Not too bad for an ETF, though. An alternative that you could use for this perhaps would be DGRO. I know that's another very popular one in the community. Next up would be VOO. VOO, just the S&P 500 straight up. Got a dividend yield of 1.48% with that. I think the expense ratio of this is 0.03%. Anyways, there is the top 10 holdings, as you see there on the side. Again, this would be literally just the benchmark. Whatever the S&P 500 is going to be doing, that's what this is going to be doing. And an alternative for this is if you wanted a more broad base market ETF, you could go with Schwab Broad Market, which is SCHB. Another popular alternative for this would be VTI, which is literally just the total U.S. stock market. And next up, we got SCHG. I like this one a lot. I actually hold this one in my Roth IRA. This one has a distribution rate yield, dividend yield, of 0.43%. So you're not getting too high of a yield with this, but you are getting some nice little gains there. Again, if you look at the top 10 holdings, the thing I like about SCHG a little bit more than QQQ, less volatility, but you still get some gains behind that. And I guess an alternative for this would be VGT, the Vanguard Growth. I think it's Growth Tech. Pretty much anything growth related. Again, you can just go to ETF.com, type in the ticker symbol here for an ETF that you like, and you could just do your own research for that. I recommend doing that for anything really, so especially if you're looking into ETFs. And lastly, QQQ. This is the NASDAQ 100 basically. Yield is 0.56%. This one has a little bit higher expense ratio. I think the expense ratio for this is 0.2%, but if you were wanting to go for a little bit lower, but pretty much the same holding, there is QQQM, and I believe it's got a distribution. Everything's going to be the same except for it doesn't have as many funds under management, so it's got an expense ratio of 0.15% instead of 0.2, so you're saving just a little bit on that. But again, very tech heavy as well. And I mean, the alternative for this one, as similar as SCHG, would be pretty much any growth related ETF. Now, another thing that you can do to kind of just tinker with performance averages just over the long run, set up your own little scenarios and stuff, would be to check out portfolioslab.com. You can go over under tools and portfolio analysis, and literally just make your own portfolio here. It doesn't even have to be ETFs. You can type in normal stocks and just check your own portfolio against a benchmark. You can change this to whatever you want as well. But I personally think that this would be a fantastic, just set it and forget it for anyone that's looking for 10, 20, 30-year time horizon. Again, not financial advice. I'm not guaranteeing anybody to get rich off this, but this would be a very simple way of investing. But yeah, that's everything I've got for you. Just wanted to put that out there. Make sure to check out the How Much to Live Off Dividends video I uploaded. And yeah, hit the like button. And until next time, take care. See you.